But so many people put the deal in front of the market, meaning if I ask one of you, okay, tell me everything about this rental, this opportunity for a rental in your, where you're looking, they'll know everything about the property itself. Then you'll start asking a little bit about the market and they can't answer any questions. And that happens all the time. And I think that's probably one of the biggest mistakes people make is they actually know more about the property than they do about the market. And if you're going to know more about the other, you really want to know the most about the market. Of course, you want to know about your property and everything along those lines. But you can change a property. You cannot change a market unless you're literally buying everything in an entire market. A really smart, wise person told me once, you cannot change a market. You can only participate in it. And so you want to look for markets that are markets you want to participate in. And I'm going to get through what that looks like. But I just want to be very clear there. I think people get too enamored with the property and not enough on the project and the actual market that they're in. So why again, market focus? It's easier to scale. When you know your market like the palm of your hands, you're able to really scale appropriately within that area versus going here, going there. It becomes like it's harder to scale, but you're able to build relationships with brokers and property management companies. You have more leverage, leverage not only for contractors, but you have leverage for agents that you work with, pretty much everyone you work with, because it's in that kind of geographical area. And I always like to say leverage, obviously maintenance, management, and money. Local business collaboration. When you really have your pulse on a local market, you can start to develop relationships with local businesses, giving your tenants some sort of give back, or, there's a lot of creative things you can do that we've done over the years to not just build within the community, but actually build good faith and customer service with your tenants. So those are key things why it's so helpful for market focus. Couple of things I want to encourage you to really be able to be like a market analysis kind of pro. But in terms of analyzing it, population growth, employment growth, and diversity. So many people are like, oh, where's their job growth? Where's their job growth? Yes, that's important, but is there a different types of jobs within the market? Meaning you don't want to just see one industry represented. You want to see a diversity of industries, ideally, because then there's a little bit of a hedging of risk mitigation there, right? Economic drivers. We had so many people are familiar with, obviously, North Carolina. It's a strong market for different reasons. And people are doing business in, Raleigh and Durham and those kind of a little bit larger geographical areas. Well, we were presented with a deal in Winston-Salem, which we really like that market a lot. And one of the things we looked for was, okay, what are the economic drivers happening within this, within this submarket of Winston-Salem? And they, actually put together a business incubator that was like $1 billion investment within Winston-Salem. Not recently, but it's had so much a positive effect that it's an incredible economic driver within that city. Why is that important? Because a lot of money is getting invested in the city. Jobs are getting brought to the city, right? And so that matters in our business of rental growth and people wanting to live there, right? So look for that in markets you're considering. Supply and demand. I tell you, if there's one thing that I think more real estate investors need to understand, they need to understand supply and demand. And I am not an expert as an economist or anything, but supply and demand is pretty simple, right? What ends up happening is that people, especially when it comes to new construction, or you see things there's oversupply, right? The demand goes down. When there's more demand and less supply, that's where you want to be. So watching that and just being mindful of that, the pendulum does swing in different ways. And you can see certain contractors are getting stuck with different new construction in different areas when it's just oversupply, right? Too many that were built. So you want to be mindful of that. And you always want to be on the side where there's less supply and more demand, right? Obviously. So affordability, affordable. When I say affordability, people want to be able to afford where they live. And what ends up happening is people get it's overpriced. They get, kind of pushed out of their neighborhoods, if you will, and they can't afford where they want to live. And so the housing shortage, right? There's a psychotically high level of housing shortage across the country. And that means that people don't have places to afford where they want to live. And so there's an opportunity there. And again, are you on the side of solving that? Or are you just looking for deals and markets and not even thinking about these more kind of macro kind of situations and drivers? Local real estate regulations and taxes. You want to obviously know what's going on there. And then obviously your rental income, right? As you're analyzing markets, what's the rental income by property, by the type of property, and all those sort of things. as is, et cetera. So again, I want to just two things. Be market obsessed. If you're going to be obsessed with something, be obsessed with the market, and then obviously solve your housing challenges, solve housing problems within a community. If you're doing that, you're thriving in today's market. If you're not doing that, you're probably having a challenge in today's market. And that's just a differentiator, and it could be a duplex. It could be a single family home. I don't mean just on the large apartment complex situation. I mean, on any scale of asset, you want to be part of like, am I solving a problem here? Am I serving the community? So let's jump into underwriting. And I say all this because you want to be able to know enough so you can build your underwriting, deal analysis kind of muscle, if you will. And it's a muscle. It's not something that like anyone's born with. It is literally a muscle that gets built over time. So what matters, right? I mean, if you think about it in a very simplistic way, income and expenses, right? It really comes down to, and I think people like to over complex different things, and then they either overdo it or they underdo it, and either or. So income, obviously your rent roll, when you're analyzing deals, you want to know obviously what the T12, which is the trailing 12-month rent roll, is for that particular property, whether again, single family or a larger property. The thing with rent roll you want to be mindful of, right, is that when you're buying a property from maybe someone who's owned it for 20 years, owned it for 15 years, typically the rent that they're bringing in is lower than what you can get in the market for that particular product. And that's what you want to know. That's why you need to have your finger on the pulse of the market. Okay. So that's just something to be mindful of always. And there's different ways to get that information. Rent-O-Meter is a good resource. Neighborhood Scout is another one. And then it goes by strategy, which we'll get to in a second here. Expenses. Obviously, there's a lot of pieces of the puzzle of expenses, but I want to focus on fixed costs and variable costs. With fixed costs, what most people don't realize, right, is that real estate taxes is not, what can I say? It's probably one of the pieces of the puzzle that you can number one, fight, and also number two, get ahead of the curve. Something that I normally have done. Excuse me, if I'm looking at buying a property in a particular community, I want to know from that community if they're going to be reassessing taxes. And what is that, what is like kind of like the plan for reassessment look like? That's something you can call the local, tax, whatever they're called, tax official, whatever their title is. There are different titles in different communities, but you want to ask the office, right? That's something we've done, especially in the higher taxed areas. We've done business in the Northeast, which is high tax, like New Jersey. And we also have done business in areas that are a little bit lower tax, right? So you're going to be mindful of that, but it is something that you can find out ahead of time if there's going to be a reassessment. And two, you can always fight it. Insurance, right? I don't know about you, but insurance is a bit of a question mark for a lot of people that own property in the areas that have been hit by hurricanes and all the different kind of things that have been happening in our country. So insurance matters right now, right? And you really want to be mindful of that. And then obviously your variable costs, right? Your utilities. I always like to say when you're analyzing deals and you're underwriting, trust but verify. There's a reason why people are selling that property. Okay. It's not just a cash cow, or it's not just this beautiful property that there's no issues of. I have bought so many properties over the last 20 years that I can count on my hand the times that what they actually said were true. Not because people are lying or people are misleading you. There's probably some people like that. But I honestly believe people don't have a finger on their pulse of their expenses. And so typically what ends up happening is they don't tell you everything. So you always want to trust but verify. I love knowing investors that have buy and holds within the areas that I'm doing buy and holds, because I also like to verify costs of different things that we're both experiencing, especially if like you have a network like InvestHer or something like that, where you're like, hey, this is what I'm getting charged. What are you seeing? Because we're only like a block away. All right, so let's get into projecting rents. Rents are such an important topic. Like I said, Neighborhood Scout, Rent-O-Meter are great ways to start to be really like, do you have a finger on your pulse of your numbers? And when you're doing your market analysis, people are like, oh, what's the going rate for X? Well, it depends on the strategy, right? You got long-term rentals, you have short-term rentals, you have midterm rentals, you have rent by the room. So all of those are strategies that you have to really verify what is the going rate for that particular strategy within that particular property. And so most people they don't delineate enough, and that's important to do that. I know that there's obviously PadSplit is a great resource for rent by the room. And obviously I want to say it's either Zillow or someone had told me that they can start to get that information on Zillow or Trulia. I forget which one. So correct. Sorry if I'm not saying it correctly, but I had just been told that you can verify some rent by the room that way. Midterm, different ways to do that. I know people have used different resources, obviously for short-term and midterm. And then obviously long-term is more of your cookie cutter. That's what I have the most experience in. That's where your rent-o-meter and things like that are going to be really, really helpful. So really quickly, rent growth projections from an underwriting perspective. I want to give you some food for thought here. And this is something that is happening everywhere, where people thought that the rule of thumb was that rents were going to go up like 20%. I mean, look at Austin, right? People projected a certain growth that honestly is now declining. So if you know anything about the Austin market, some of the rent growth has declined, not increased. So you always want to be conservative. And so, but you do want to have some underwriting when you're looking at properties. Rule of thumb is we use 5% a lot of the time, something conservative, a small percent of growth, rental growth. But I like I said, syndicators and multifamily property owners that projected rent in such an aggressive way in the last few years are getting burned now. And so you really want to be careful to not be so ambitious with that and be more conservative. That is the name of the game right now, is be conservative with your underwriting, big time. Okay, so that's a little bit about underwriting. Again, there's a lot of different tools and strategies, but I wanted to give you kind of high level, my 2 cents in the philosophical. In finding deals, find a market, start building relationships within that market, and obviously, all the other things that go along with it. So I want to get to building a team, and I want to be mindful of time. Building a team is really important. So I want to be very clear. You need to know enough to understand what you're doing and build the muscle, like I said earlier. But as you scale, it is about building that team. So I just always like to tell people, you have a core genius, and find what that is. Find like that 1 or 2 things that you do, you're passionate about, you do amazingly well. And as you're scaling and as you're growing, really build around that. Had we done that sooner, we really would have, I think, scaled quicker. We did scale our business. We're building InvestHer. I built different businesses, but I really lean into what I'm great at and try to get out of the way of things that I'm even great, good, or adequate at. And then lastly here, these are the four kind of roles that I've seen, especially on a multifamily perspective. You have the money is the person putting the deal together, right? Raising money or structuring the deal. And that can sometimes be somebody you see in social media, right? Doesn't necessarily mean they're actually in the operational side. Then you have the hammer. You have somebody who's actually operating the deal day to day. So that could be an asset manager. That could be the person that's meeting the contractor. They're literally managing the timeline and the budget. You got this person who looks like they're shooting an arrow. They're finding deals, right? And there's certain behaviors or certain skill set that you need when you're finding deals, both online and in person, of course. And then you have this person with the brains. They're the brains. So in essence, they're putting a business plan together. They're underwriting. They're really putting the analysis of the deal together. So what I found is that early on in our business of scaling multifamily, we were all 4 of these things. And again, operationally and quite honestly, the underwriting, we were good at. We were great and exceptional at raising money, putting the deal together, and finding deals. My husband and I both were very good at those 2. But to build a business, right, you can't just be good at it just, one core genius is not enough. You really need to build around yourself. So I just like to say, as I shared those 4, where do you shine? Are you more operationally focused? Are you more on the front end focused? And as you're looking for 2025 and you're looking to find more deals and underwrite deals, where do you need to build around you? And those are not the same people. Finding deals and underwriting deals, they're actually very different people, right? And that's why I wanted to put those 2 together. because typically people gravitate to one or two of these. You cannot be exceptional at all four of these. I don't know anyone like that. Even very, very successful, seasoned investors. They typically are amazing and core genius at one, maybe two of these, tops.
Thanks for listening to the Deal Machine Real Estate Investing Podcast. Please leave us a review and follow along wherever you're listening to your podcast.